Okay, guys, welcome. Here we go again. Would you believe 2025 is almost over? Welcome, welcome, welcome. Hello, Perth, 4 p.m. for you. Hello, Queensland, New South Wales, Victoria, South Australia. Hello, Australia. Guys, it is my pleasure to be with you again. Listen, this year alone, we have created a few more multimillionaires. This conversation called Australia, this conversation called what is possible for our future. It is amazing that you are here with me. I just want to welcome you, welcome you. And the name of this event is called the Gold Strategy. We know that right now the price of gold is going through the roof. But tonight I'm going to show you a lot more than just speculation, just little news, but a strategy that will get you ahead. Welcome everyone. Welcome everyone. I want you to know my team is here with me right now. I want to hear your comments. If there is anything that you want to know, just please write on the comments, send us the notes. The team is here and we will select the best questions of this event to answer at the end. And that makes the event go so well. I want to say to you a few things so that we can just start warming up. Hello, hello, hello. If you are from Perth right now, can you just give us a hoy? If you are from Adelaide right now, if you are from Melbourne, if you are from Sydney, Brisbane, Gold Coast, can you give us a hoy? Just open up your camera, say hello. Hey guys, it is very cool. We have another screen right here right now showing us, everybody showing up. So as you arrive, if you please turn on your camera, say hi to everybody, and send us a comment. Why are you here today? What do you want to get out of being here today? All right? So guys, my name is Julio de Laffitte, and I want to just take you through a journey tonight, a journey of learning. My intention is that you would get enough out of this conversation tonight that would be the equivalent of 100 hours worth of reading. And how am I going to do that? I'm going to consolidate some concepts and I'm going to do a lot of storytelling. I'm going to put these amazing concepts inside of the storytelling so that not only you will learn and keep it, but the numbers will make sense. So let me just talk to you a little bit about our mission. Okay, is to raise in real term the financial intelligence and its applications to all Australians. So I can see a few more people arriving. Welcome, welcome, welcome. By the way, guys, listen. Thank you for being here already. If you're here and you have a partner and your partner is not here, do yourself a favor. Send your partner a message, send them the link to this and say, hey, Julio has begun, come on in. I promise you, I'm not going to waste your time. And the information you're going to get from me today is of extreme value. I just want to start, as I told you, with some storytelling, some concepts on how this whole thing came about. I was sharing with a very elite group this week that all the distinction that happened for me as a young man was that how easier in Australia access to money was. Let me explain this to you because this will define everything. The majority of people live their lives matching their income to their expenses. You know that. I'm going to talk a little bit more about that. But once you notice, in order to prosper, you have to have access to money. Why am I talking about that? Just off the cuff. Let's just going off. The truth is, when I arrived here in Australia as a very young man, few things happened for me that gave me the contrast, and I knew I was going to be rich. If you can hear this, and it will just kind of be the launch for our conversation. I did not know how, but I knew intuitively that I was going to be rich. Listen to this now carefully. I was born in South America. My parents are Europeans. When I left South America as a young man, inflation in Brazil was 230% per annum. Just kind of let your mind go there for a second. When I arrived in Australia, inflation was as high as 12%. And I want to say this to you, the Australians were afraid for the future. Right now, there's a lot of fear for the future. There's nothing new. I want you to be a student of history. I want you to know the ways that they come and how the humankind actually operate. So when I arrived in Australia in the late 80s, early 90s, what actually happened was inflation was high and fear for the future was real. But when I was given the contrast that inflation in Brazil was 230%, and in Australia, inflation was 12%, I then proceeded to ask people, what is the cost of money? I can see a few more people arriving right now. Guys, I am telling you a story about looking at the numbers and perceiving the future. Welcome, welcome, welcome. So, if you see that the reality was, I asked people, what is the cost of money? People don't talk like that. They talk about what's the interest rates. When I asked people, what's the cost of money? And they told me that the cost of money back when I arrived was 12%. Hear me out. In Brazil, when I left, interest rates were 12% per month. In Australia, it was 12% per annum. Now, still in Australia, people were afraid of tomorrow. They were still afraid of what's happening. In Brazil, if you borrowed $100,000, you would need 30 days to show up with 12,000 to pay the interest on the loan. When I realized it was going to take me a year to show up with the same money, it occurred to me it's free money. I want right now to break your pattern. Whatever future you have right now, whatever fear you have right now about the future, tonight we'll smash it, take it out. Because when I got here, that contrast set all the difference. In Brazil, 12% per month. In Australia, 12% per annum. You borrowed 100 grand, you have 30 days to show up with the interest component to pay back $12,000 at the end of the month. In Australia, you had the whole year to show up with the 12,000. And yet, people are afraid here for tomorrow. Little did I know then that when I imagined that money was so cheap here, I got 2 jobs. We lived on the income of my wife's income, and we then saved all the money that I had. And that's the biggest distinction, is when you make your money work for you. Guys, tonight we're going to cover an incredible amount of territory. We are going to actually cover an incredible amount of understanding of how good Australia really is. So I started investing. I bought my first house because they let me. Then I borrowed against that house and I bought another one. And then I bought another one. The truth is, I have never taken Australia for granted. And I know that most people don't, but I'm talking from a financial and investment point of view. You are in the best country in the world to invest. Now, if you know that right now, would you just be so kind to write right now on the notes here, to write on the comments, I know it. If you don't know it yet, just write it then, show me. And then we can interact. And if you haven't opened up your cameras yet, please open up your cameras and we will go to town tonight. So guys, this work we have done called JDL strategies. JDL stands for Just Do Life. We have indeed created over 2,400 multimillionaires in our journey. This work we're doing called JDL strategies has been so significant that I have been invited to speak in Parliament 3 times about the future of the Australian economy. Let me actually just show this to you. Let me play this to you now. The whole conversation about being here this morning is very simple. Could you imagine what happened, and I'm going to talk some more about this, to Uber and the taxi industry, what happened to the accountants? Because it was like, there was no Uber, and then there was Uber, and then no one took notice, and then there was no more taxis. Well, they're still there, right? They're still there. But what was the value of a tax plate, right, before Uber came along? It's $500,000 for a license. What's the value of it tonight? These are incredible conversations. And we are working
with accountants across Australia, not about accounting in the future, but accounting in the future of the future in the now. I want you to imagine, right, a software that has the ability to look at 100,000 data points simultaneously. And that's not in the future. We have it tonight. It will be exactly what I have just described. Analyze the traffic of financial data, predict the best route, call all the inefficiencies, and put forward appropriate adjustments. While doing it all, it will create the entire file notes, help the humans with the strategy, and guess what? Never print an uncompliant plan. What about that?
Because of this work that we have been doing, helping Australians to get ahead in life, I turn out to be cover of CEO magazine. CEO magazine is one of the leading magazines, business magazines in Australia. So it is this exchange between your possibilities and what we teach that makes all of this possible. So how do you create multimillionaires? How do you get people to get ahead in life? It's called distinctions. And today I'm gonna give you a bunch of distinctions that I will empower you to have better conversations with your accountant, with your financial planner, and even if you want, with your mother-in-law, all right? Of course, there is a joke here, and I have had over the last 2 events, people talking about their mothers-in-law and become a comment here between us. But bottom line is, it doesn't matter where the challenge comes from, I will empower you with understanding you have not seen before. And the reason why I show you a little bit of the credentials is some of you are meeting me for the very, very first time. So we started JDL, we started teaching people this concept about wealth creation. It gets us speaking in Parliament about the future of the Australian economy. The next thing that happens then is this. We started then talking to people about all the possibilities that Australia will bring. I started this organization called the Unstoppables. It's all about gathering those that want to get ahead in life. Let me just show you an interview with some major TV stations here in Australia. Let me just show you that.
Welcome back, Julio de Laffitte, who is the founder of the entrepreneurial movement called the Unstoppables. Now, when I first met Julio last year, he was in the planning stage of his expedition to Antarctica, along with the other 120 or so entrepreneurs he was taking with him. So tonight he's going to share how the experience actually stacked up and why he's preparing to do it again. Nothing like an expedition to really ignite the entrepreneurial spirit and drive new business ideas. A big task, a big ask,
yes,
Julio.
Heidi. Yeah, it was amazing. Heidi's like an incredible, one of the best experiences of my life. You imagine 110 people on a boat, 70% of them are personality A. They know better.
Yeah.
And then the facilitators are coming together and asking questions to bring out what are we supposed to do with the future of Australia.
In social media, though, when we come into the new world of social media, what happens now is this, fast. I gotta do videos in a minute. I gotta do videos in a minute and a half. Guys, we can't afford to be shallow. We can't. So I understand we are being programmed to be shallow. Next, scroll. Tonight, I want you to go the opposite direction. I want you to open your heart, open your mind. And when we start talking about numbers, I want you to lean in, right? And by the way, of course, we are growing the following. If you could follow me on Instagram, I would appreciate that. My team here asked me to always say that. I promise you this. All the information you're going to get from Just Do Life will be impactful. It will be amazing things for you to teach your children. And that is the promise of my whole entire team here to you. If you follow us, the content that we dispense and we give to people, it's never shallow, right? So that's the only thing I can say to you. Again, if you were to come into the JDL strategies, so if you just to go into jdlstrategies.com.au, you will get an incredible amount of content designed for you to have better conversations with your accountant, with your financial planner, with your spouse, with yourself about what's possible. So guys, all this content is curated It doesn't matter where you are. If you are just here for the very first time, know nothing about investment, tonight you're going to learn a lot. For those of you that already have a few property investments and just want to know better strategies, we have other trainings. We have a training where every single person in the room is an accountant. Every single person in the room is an accountant. It's called the Golden Parts. If you want it, just write down into the comments right now, I want it. And my team is here right now, and they will take it and we'll send the video through to you. In the JDL website as well, there is another book we just launched called The Third Path. Read it. I promise you, you can read it in half an hour, 45 minutes, right? It's designed for you to read it on a flight. Read it. It will make, I promise to you, all the difference on your outlook in life. So guys, let's go. What are we going to deliver today? Learn how to pay off your mortgage years earlier. I want you out of that. Know how to achieve financial independence, on how to build a portfolio to retire early. I understand though that when people say retirement, there is the retirement will never work again. And there is also the possibility of being financially independent. What does that mean? Financial independence means this. You want to take a year off, you want to stop working, right? You can. You have enough assets behind you to do so. And that's pretty much what the conversation tonight's all about. How to minimize your tax legally and how to do it perpetually. See, governments will always give you tax incentives if you invest. Always. Most of the Western countries will give you that capabilities. And we're going to talk a little bit more about that. If you can minimize your tax legally and use that money to drive your debt down, now we have a system. As your debt comes down, the less debt you have, the more you can invest. The more you invest, less tax you pay. And that's pretty much where we're going to go tonight. Build your financial life. Real estate portfolio as opportunities beyond what you're doing right now. There is a conversation called Australia. And we're going to go into the numbers in a moment of clarity. Let me show you what I observe on when people follow us and the level of questions that they bring. There are levels of understandings and levels of where you may be at in life, all right? And once we name them, people can say, oh, that's where I am. Oh, I am in this one. And you can start seeing, oh, that's the next level. And then the conversation starts to make more sense and be more accurate. So let's go. Level one, it's called financial survival, right? It's when you're just matching your income to your expenses, you got your job, you are just starting out in life, right? And you're just surviving. You don't have a lot of money left at the end of the month. Investing is something that it's not in your radar right now, and you're just surviving this month and this year, kind of make things do. The next one then is the family loyalty. It begins the moment in which you start a family. There is a sense in you where you go, I'm an adult now. Or you're in a committed relationship and you're talking about having your money work for you. There is a sense in which money working for you becomes a deeper piece. Some people are really aware of it, some people are not. And often that level manifests like this. We have a kid now. We have to put a roof over our kids' head. We got to give them education. Now, money has to work a little harder for us. But that's not really how people actually translate in life. They work harder themselves, right? They got a bit more committed to have a functional family. So therefore, they get a bit more committed to their careers, to the monies that they need to make. And yet, they have not yet arrived at a position, my money needs to work for me, okay? So you see level two, going into level three, is the pursuit of money driven by impulsiveness and sheer effort. Let me show you this. Yep, I got a family now, I got a promotion, and in my impulsiveness, I buy a better car, I take a bigger holidays, and I have not yet designed a plan to get richer. So if you're to ask me, Julio, how do I get rich? Well, or you are accumulating capital or you are not. What do you mean? Well, superannuation is a government-designed accumulation of capital process. It's basically a situation where a percentage of your salary goes into this box called superannuation. Most people don't even look at it. Why? Because they don't have the distinction of my money working for me. So this money goes into this kind of invisible box, right? And then it will accumulate some money. By the time you retire, that's your pension. Imagine if tonight there is a aha moment and you realize, oh my God, I'm in the best country in the world. I can actually have my money work for me, as if I now have a plan of action in which I will become a wealthier person. This is where we're going. So in level 4 is when people started their own business. Now, higher risk, higher return. Starting your own business, not for everyone. So if you have a great career and you're in a job, you can still create an incredible amount of wealth. For those of you that will start successful businesses, right? That's why we created the Unstoppables. Not only you will have a bunch of properties along the way, but you may have your business as well to sell at the end of it all, right? Now, once you actually make a lot more money than you need or want, then you can go into legacy. So guys, so what I want you to understand now is that the basics of all of it, is this one slide. Let's go. I will now give you 4 books on wealth creation in one slide, okay? The idea is this: the more you read about wealth creation, this book, that other book, you read Rich Dad Poor Dad, you read stuff from Dalio, you read stuff from Whitaker, whatever the author may be, when you start to crunch it down and get the main concept of an entire book, I'm gonna put it into this one slide. Here we go. You see the blue arrow going up? That means this: you have a priority on your existence that you are accumulating assets, right? A little conversation you could have with yourself is to pick up a date in your calendar and choose that date to ask you this one question. Am I richer than last year? There's no ego in this. It's just discipline. For me, it's the 7th of August, which is the birth of my first child, right? That's the day we look up. So on the 7th of August every year, I have a just pragmatic question. Am I richer than last year? Let me just tell you something as well. It is about the money, but it's not all about the money. Are you richer in your experiences? Are you richer in the level and depth of conversations you're having with people? Are you richer in your spiritual path? Are you richer in every facet of life? Yes or no? But tonight, we're talking about richer in money. We understand the money is just a conveyor belt for possibilities, right? So we're gonna create this strategy for you to become a wealthier person. And from that wealth, you will be able to then buy yourself more time, more experiences, better connections, better travels, better conversations. I hope this is starting to make sense. Let's go back to the numbers. So create assets, right? Now, the moment you start to create assets, you are investing. What happens now is if your investments go off and start making you money, the income from that investments will add to your overall income, so you'll pay more tax. So you have to be very clear that these assets you're building, if it can grow in value and give you tax deductions, then you have a double whammy. And that's why we love property, because we're in a young country that is growing, and property is something we need to grow the nation. We don't even have enough houses now, and we ain't gonna have enough houses for a long, long time. So get this: if you build a portfolio of properties, it will build assets that are gonna grow in value, and those assets will give you huge tax deductions. I'm gonna touch on that a little later. If you start to get tax deductions, this simply means you're gonna get a chunk of money back from the ATO because you invest in property. Once you get that money back, what you do is you kick in your discipline, and that money back goes on to your current debt. Keep reducing it. So assets that increase, minimize your tax, use the tax back to drive your debt down. This, please take a screenshot right now. If you even could print this and put in your mirror, right, in the morning, just look at it. Look at it. Or you are increasing your assets, or you are not. You're minimizing your taxes, or you're not. You're reducing. But if you can sit on that day and say, am I richer than last year? And know you have assets that are growing, okay? Tax that is being minimized, and then personal debt. I will say to you, when I bring in the Just to Life software, which I will do in a moment, your mind will blow once you have a strategies and you can actually see the numbers performing. For those of you that never invested, there is a bit of hesitation. There's a bit of like, oh, what do I know? And please notice when we start talking about numbers, most people start to kind of hesitate, shut down. Not anymore. Not anymore. Because with our software, the level of intelligence inside of that software, there is zero judgment. There's only strategy. So guys, what are we currently seeing? Well, what's happening now as far as the world is concerned, yes, there's a lot of ideas about, everything's moving, what's going to happen to AI, what's happening between the United States and China, and so on. So let me give you a prediction of the future. The future is full of possibility and laced with difficulties. If you can understand that nothing is new, nothing is new. Get ready for what I'm about to say. If possibly, write this down. Cool? After the recession comes the boom. After the boom comes the recession. After there's nothing new, right? So when you understand that the future is full of difficulties, full of opportunities, and they go with each other, the idea is to have the ability to undo the difficulties and position yourself. And that has to do with numbers and the ability to look at them. I'm so happy you are here. I'm so happy you are here because we start to get to have this conversation. So, from a macro point of view, the gold is extremely high, right? The value of gold right now. So when you look at that and people say, oh, what about tomorrow? What about 2026? Well, what gives me confidence and gives me courage to look at it is I live in a young nation where it doesn't matter what people say. Our economy is robust for a long, long time. It has been and will be. Why? Because we have commodities. The wealth in the ground here in this island called Australia is insane. We have enough wealth here for every single Australian to be rich forever. Well, but there is another thing called the economy on top of it. And we have a small population. So it doesn't matter the fluctuations of the world. We have enough food, we have enough water, we have enough sun to create energy. The truth is, I'm in the best country in the world. And what happens is the news, they sell fear. Fear doesn't cut it. So we're going to start moving. As a matter of fact, this is a great segue for my next slide, and it goes like this. What if you've been hypnotized to fail? Hypnotized to fail. So I am now jumping from a system, creating assets, minimizing your tax, minimizing your debt. Now I'm telling you about a macro point of view, saying that the media just keeps giving us all these mixed signals about the future. And then we sit with, hold on a second, no more mixed signals, no more. I live in Australia. The population here is going to go from 27 million to 80 million people. Yep. Yeah, there are some plans that say that the island will go to 80 million and then we're going to kind of plateau. If you took a photo of Australia with 80 million people from space, she will still look empty. Are you clear on what I'm saying? So if you look at the last 30 years, we went from 18 million to 27 million. Look at the amount of wealth we created over the last 30 years. If we're going to go, right now, the Bureau of Statistics is telling us we're going to go from 27 million to 36 million in the next 20 or so years, right? I want you to imagine the amount of wealth that we're going to create. Not for those that are afraid, not for those that live in fear, but for those that look at the numbers and able to activate what's possible for them. And that's why we're going to integrate in storytelling, numbers, and then when we bring in the software to show it to you, I want you right now, if possible for you, text your accountant right now and say, hi, Ann, hi, Jimmy, how you doing? Whatever your accountant's name is. Say, hey, we're listening to Julio de Laffitte right now. Will you please come in? Just listen to what Julio is saying, because we're going to go now, right? I'm going to lead now into your personal experience, and then we will end up with the software. Let's go. This is a great transition for me. How hypnotized are you to fail? It's just a question. On a level 1 to 10, how hypnotized are you to fail financially, right? Let me show you the gig. The gig is this. As you know, we have a lot of engineers, architects, a lot of doctors are our clients, okay? So we have people in every walk of life, and we have people that their income is very high. I want you to know right now that income is not wealth. I can prove it to you that we have every week people with high income coming every week, and they're not gonna be as rich as the person with lower income but a strategy. See, the definition here is you have a strategy or you don't to accumulate those assets. So here is the gig, and I want you to notice. If you are on 50 grand a year, you spend 50 grand a year. If you're on 200 grand a year, you spend 200 grand a year. Notice that. The majority of people will spend everything that they earn until their 46th birthday. Around their 46th birthday, something happens. It's like, oh my God, I should be way ahead than where I am right now. The truth is this. We've been looking for that pay rise and that pay rise. How long does it take for you to spend a pay rise? 6 minutes. You call, honey, we're going on holiday. I just got a pay rise. Or we're going to buy that new car. See, I want you to understand the majority of people truly spend all their income. That distinction of having my money work for me kicks in your late 40s, early 50s. Why? It has to do with the fact that your highest priority is to educate your children. As a matter of fact, you're confused towards investment and education. What happened was when you had a child, you start thinking, oh my God, I got to protect this child, and now I'm going to invest in education of this child, because education is the best access to wealth. Yeah, it's true, but it's limited. The best access to wealth is have money work for you, right? But most people stay stuck on this concept for perhaps way too long. So around 46, around your late 40s, early 50s, your youngest child is now a teenager or a young adult, and that's when you say, oh my God, how am I going to land this thing called my financial life? And that's when things start to change, right? That's when you are here now and we start talking like this. The truth is, in that entire journey of yours, what you never noticed was the difference between your gross and your net. So when you went for that job and they offered you $100,000 for that job, great, I'll make 100 grand a year, excellent. The truth is, you never got 100 grand in your pocket, did you? You got 70 grand in your pocket, 70 something. The truth is, if we're to put the money you pay in tax to the government in time, you and I know that you work 3 to 4 months of the year for the government. By the way, we are not against tax. If we're to compare time and money, for every $100 that you make, $30 goes to the government. If I was to put that in time, January, February, March, April, you worked for the government. And the rest of the year, you're gonna cover, your family's head. pay for your expenses? When do you have space to think about investing, having your money work for you? That's then where we call the hypnosis. People matching their income to expenses, not aware of the numbers. And I'm so glad you're here. Do you understand now why I said call your accountant or call your financial planner? Come on in. I'm not against tax. I'm actually understand that the schools, the police, the roads, they all need the government. It needs tax in order to operate. But if a government is giving you tax concessions and you are not taking them, then we're talking about something else. So the reason why the governments will always give you tax incentives is because they want your money to go towards some certain industries. For example, the movie industry in Australia. I'm not saying movies are good investments, but often you have great tax concessions if you invest in a movie. Why? Because the government wants to get our movie industry going. They want all the Americans to produce their movies here. They want the Canadians to produce their movies here. They want the Europeans to produce their movies here. Why? Because then it gives jobs to Australians. When you talk about negative gearing and property investment, we're going to go deeper into this. Every election, every year, this is whole conversation. They're going to take negative gearing out. They're going to take negative gearing out. No, they won't. They can't afford to. Why? Because we don't have enough houses. The point, though, is this. What is your personal tax return, right, telling you? How much tax did you pay last year? If you pay $24,182 in tax, what is your return on that money? Now we're going down the ideation that you have a strategy and you don't. If you do have a strategy, you're a client of JDL Strategies, I can promise you the biggest amount of tax came back to you. Imagine if off that $24,000, 17 came back to you. What would you do? The uninitiated will take that tax back from the ATO and see it as income. They will look at it and go, woo, honey, we're going to go on holiday. Again, hypnotized to spend all the money we got. What if you could position yourself that you would know that the money's coming, and it's coming every year, and it's getting bigger, right? And you could use that money. So you got, out of your 24 you're paying out, and you got 17 coming back, and you dumped in that 17 onto the mortgage on your own home or your first property investment. That money is performing for you now at 6% per annum. Yeah. How's it working? 6% per annum. Because if you got $17,000 and put against a debt, you're no longer paying 6% interest on that 17. It went straight into the principal. Right. And a dollar saved is more powerful than a dollar made because you don't pay tax on money that you saved. By plugging in all the tax you get back into your mortgage, we start to get a return on that money that's off the charter. So when I ask the question here, from an efficiency perspective, what is the return on the $24,000 you paid in tax being zero? That speaks to the people without strategy. And the majority of people you know have no strategy. And that's where we're going to go with this. So guys, it is dangerous when you are addicted to debt and playing a zero-sum game, meaning matching your income to expenses. And when you sit in that particular day in the year, am I richer than last year? No, I'm not, right? So plenty of things to think about already, right? So guys, let's go. I was alluding to the 46-year-old, the average Australian, 46 years of age. Let's have a look at the numbers, okay? Just detach from it emotionally and just have a look at the numbers. So the average 46-year-old in Australia, from Darwin to Perth, right? From Brisbane to Melbourne, it doesn't matter. If I was to take the average of averages in Australia, a 46-year-old will have a house worth around $900,000 with a mortgage of $590,000. Now, I want to go somewhere here. It's critical. If somebody said to you, how come you have a mortgage? How come you're 46 years of age and you have a mortgage? What happened? I doubt it very much. First and foremost, that you ask that question to anyone. But I doubt it very much that somebody would say to you, oh, I have been hypnotized to do it. It's called social conditioning. And that's why I asked you earlier in the presentation, go to jdlstrategies.com.au, right? And download the book, The Third Path. Do it, right? Because no one is going to say, I've been hypnotized to have debt. Well, my friend's doing it, my cousin is doing it, my mom is doing it, everybody's doing it. Everybody. Well, what do you mean? Well, the reason why you have debt at 46 is because you had no strategy to get rid of that debt. What else I can tell you is most of our clients in JDL have a strategy to get rid of their debt fast. And again, when we go to software, we'll see that. So then, and when you see a 46-year-old with less than $165,000 in super, you understand now that their permission for wealth, right, is to one day pay the house off. So follow this with me. You made a decision to buy a house and you're paying that house off, and the only wealth accumulation you have is this thing called super. Of course, your own home is going up in value. Thank God you bought that. But that's an asset you bought yesterday. And whatever you buy yesterday is cheaper than tomorrow. So if you bought your house tonight for $1 million and you and I met in 12 years from now, there's a very high chance that property is going to be worth almost $2 million or just over, right? Why? Because you bought today and tomorrow it will be a different price. Okay? So the default permission for most people is to own their house off. When we run the financial wealth check, and I told you, the software is amazing. When we first meet people without a strategy and we run the protocol, what we realize is this: people are gonna have to use a little bit of the super to actually clear the little bit of debt that they have in their house. Let me be very straight. At 67 years of age, you may still have $100,000, $150,000 worth of mortgage in your own home. And then out of that $2 million you have in super, you're gonna have to take 150 grand to clear your debt. Man, the majority of permission for people is to own their own home. How rich are you? Oh, I got this house, my house, and I got this bit in super. Is that enough? Well, what is enough? That's the conversation, especially if you want to get rich, right? So your numbers have no feelings. You do. I am so glad you are here. Now, there's a few things that should be happening to you. You should be expanding right now, and there are other people you know that should be here. There are other people that you know that you should be here. So if I was to ask you to take a few seconds, get the link in which you arrived here, copy it, paste it to somebody you care about, because we're going to keep going. If you are liking the content, let me know, right? I now will give you, in 6 pages or so, 6 slides or so, I will give you again. If you were to go to the library today and say, how do I get rid of my debt? I'm now going to give you debt reduction strategies that is amazing and powerful. And I want you to be able to have a conversation like that with your adult children. Oh, you don't have adult children and you have adult friends? Well, have it with them now. Now I'm going to have a conversation, very succinct, straight to the point with you, that you will understand that no bank lends money. That is a lie. That is part of the hypnosis. Banks sell money, right? So next time you go to a bank, rather than ask the question, hey, can I borrow some money? What's the interest rates? You could literally say, hello, can I buy some money? What's the price? Are you getting the distinctions? There is no free money. There's no free lunch. Let's go. 101 on finance. I want you to imagine right now that you went to your backyard and you decided to put a swimming pool there. You talked to the builder, you talked to the swimming pool company, and they said, look, we can build the retaining walls, we can put the pool, yes, we go to the council, we get the permits, we do everything. This pool is going to cost $100,000, okay? The reason why I'm using a pool is just a conversation, a storytelling, but I want you to understand what an adult would experience with $100,000 worth of debt, right? So to make it really clear, imagine you had no debt, debt-free, and you went to borrow 100 grand to build this pool. I want everybody in the imagination with me so you can just see $100,000 worth of debt. Cool? Now, what we know about this is the moment in which you go to the bank and you say, hey, I want to borrow 100 grand, and the bank manager, the teller, whoever you broker you're talking to, and they say, hey, listen, this 100 grand at 6% will cost you around $644.30 per month. Notice if this was true and you're sitting there and you're asking for the money, the moment in which $100,000, a big number, the moment in which they give you that monthly amount, they give you the repayment amount, I want you to notice that all your decision-making processes are done. Done, done, done. Most people you know will make the decisions on the loan on the monthly, weekly repayment. That's it. Have a look at the repayment. Now, don't look at anything else. This is it. Just have a look at this. Notice that the moment you're given that figure, no one pulls a calculator, pulls a spreadsheet, right? It's a feeling. It's a gut feeling. And if you're in a partnership, you look at your partner and you say, we can do that, right? We can do that. Yeah. We're good. So, yeah, we can afford that. Yeah. Man, at that moment, you're already in the pool. You're already imagining the summer is coming. I'm swimming in my pool. $644. My decision is made. The truth is, you will pay back for that $100,000 over the next 25 years. You will pay back $193,000. You kind of know that, but you kind of don't know that. So most people make the decisions like this. I want to borrow 100 grand, $644. Yep, got it. I'm in. Well, by law, every financial institution has to tell you the cost of that money, but no one reads it. If you pull up now the your mortgage documents, right, for your own home, they're gonna be a curve, they're gonna be a table, they're gonna be a pie chart, they're gonna be some kind of display on how much money this will cost you, but no one read it. 1%, 2% of the population reads it. I'm so glad you're here. Let's have a look at the numbers now, dispassionate. If you have a look at this curve, so that is, you borrowed $100,000, and you're gonna pay back in 24 years. Now check this out. Notice that in the first 10 years, 11 years, the debt's not coming down. It's not. It's kind of hovering really high. And something happens around the 11th year where the debt then starts to come down. No one notices. No one looks at it. They just pay the $644. So now what happens now is this. In the first year, you pay back the bank $7,732. Got it. But if you to walk into the bank and say, hey, how much am I good for? Off the principal, you only paid $1,700. There is a reason, and I'm going to teach it to you. Just follow the numbers for now. 5 years in this game, you paid the bank back $38,000. But if you're to say to the bank, how much am I good for? How much of my debt have I actually cleared? Or 10 grand. 10 years in, you paid 73, but you're only good for 23. Then you walk in the month to see the bank manager and say, how come I gave you all this money? Now you're gonna hear two words. They're gonna put two words together. They're gonna say the interest component. You hear me? So basically what happens is this. When you borrow the money, there will be the principal, which is the amount you borrowed, and you gotta pay that back. On top of that principal, there will be the interest. You following this? So in the first 10 years, they will charge you the interest first. Why? Because you're the risk. So we need to guarantee our return, the return for our shareholders. So what happens is the bulk of the money that you are paying in the early days are going into the interest component. Right. Around the 10th year, 11th year, the calculator inside of the bank system starts to then change the ratios where the bulk of the money now is going towards the principal. That's why the experience is in the first 11 years of the loan, you pay, but you're only paying the bulk of the interest component, a little bit, right, of the principal itself. Now check this out. That is the life of the loan. Now, let me just invite you to consider something here with me. And I want to hear from you. Just type in the comments for me. What happens to people? What happens to you? What happens to people you know? What people will do after they've been living in a house for 10 years, right? I want to see some of the comments. Bottom line is this. After you've been in a house for 10 years, that hypnosis I told you about a chapter ago kicks in. Watch people go. They will buy a bigger house or they will renovate the house they live in. That's what's going to happen. Why? Because the hypnosis just kick in. Husband-wife team talking. Honey, you make a lot more money. That's right. So do you. We must match our income to our expenses. Let's not live here anymore. Let's live over there. Where? Where the houses are bigger. Why? Because we make more money. So pretty much what will happen to you is you will say, the schools over there are better. This is better. We can afford a much bigger repayment. So most people you know, after 7 years living in the first house, they will sell the house and buy a bigger one. After 10 years, they will buy a bigger one. Why? Because they can repay the repayments on a bigger house. That's it. Well, the truth is, everything being equal, you will sell this house. And where do you start in a new house? From year zero. Well, that's a mistake. When you ask people, how come you still have a mortgage on your 46th birthday? And people say, oh, rah, rah, rah. No. You're hypnotized to fail financially. What? Yeah. Watch this. The moment in which you sell your house and you buy a bigger one, your new mortgage is going to start at zero. So all these years where you're paying, the biggest part of it is the interest component in a bigger mortgage. And that's why the majority of people will clear the debt on their own home when they're just about to retire. Therefore, the permission for wealth for most people is to own their own home. I have a little bit in super. I'm so glad you're here because as you can tell, I'm giving you the foundation. You know, when you can stand strong, you need to understand these concepts so you can make an incredible positioning for your future, right? So back into the numbers now. So that's the finance part, but it gets worse. I promise you, this is gonna get better. It's gonna get better very soon. When do you pay for your mortgage? Get clear. You pay for your mortgage after tax. So if you notice, what is the greatest Canadian dream? Oh, American dream. Oh, Brazilian dream. Oh, we're in Australia, dude. What are you talking about? What's the greatest Australian dream? It's to own your own home, right? That's it. Is that a bit of indoctrination? Do yourself a favor. Go into jdlstrategies.com.au right now and download the third path. Just do it. Do it. Read it. I promise you, share it. Promise you will change the way you see things. Now, you pay for your mortgage after tax. Let's just look at the numbers. Remember when I said your numbers have no feelings, you do? Well, let's look at it now. So you wanted to borrow $100,000 for your swimming pool, yeah? Yeah. And you made all your decisions on $644, like everybody else. Yeah. Okay, now, you will pay back for that $100,000 after you pay all the interest, $193,000. Yeah, got you, Julio. Now, when do you pay for your mortgage? After tax. So, because you have this mortgage, you got to earn this money, but you don't take the whole money home. You take an amount of money, you pay tax, then you have the money left. So to have $193,000 in your pocket, you have got to earn $298,000. Pay $104 in tax. Yep. To have the $193, and the only thing you meant to borrow was $100,000. In other words, if you got $1, yep, you worked for that $1, yes. Well, you're not getting the whole dollar. Oh, okay, how much am I getting? You're getting 70 cents. All right. And then you get that 70 cents and you throw into the debt machine. Out of that 70 cents, 9 cents is going into your debt reduction. 9 cents of your whole dollar. The leftover is paying the interest, and you're going to do it again and again by not having a strategy, and the only thing you did is buy a bigger house. And I believe me, most accountants think that that is okay. It's not okay. It's not okay. Most financial planners say to you, it's okay. It's not okay. And I'll prove it to you why people think it's okay. Because they say things to you like this. Oh, when you buy your own home, when you sell it, you gotta hear the command in that. When you sell it, when you sell your own home, you only gonna pay, capital gains tax on your own home. What's implied is the command that at the end of the day, you're gonna have to sell your house. Why? Because you don't have enough money to eat. So basically, pretty much is this. You build your whole entire life, your permission for wealth is to own that house, You have a little bit in super, yeah? And then that super ends, Then you gotta sell the house. Oh yeah, you're not gonna pay any capital gains tax or not. Turn it into cash so you can live your life. And then you buy a smaller property. Highly inefficient. And that's why we create just to life. That's why we created JDL and strategies so you don't get trapped. Now I'm gonna change gears and we're gonna go now into a much better conversation, right? I wanna give you the key for getting richer. Australia and the demand for housing, okay? Why the government needs you to seize this opportunity. Let's go do this together. I already hinted at you that the population is gonna grow. So if you live in an island, demand, listen, when demand is higher than the supply, demand will command price. So you know, and I know that we live in an island that's gonna need more houses that we can produce. The prices of houses will go up. It's just a curve to say to you that the real estate supply is not catching up. So we're gonna need more houses. So whatever houses you buy now, they'll be cheap. Let me just give you another insight on this. I've been saying this now for a long time. I remember when properties were $350,000 and people are freaking out. And I put a bunch of articles and I made a bunch of videos saying, are you gonna go to $1 million? And people thought I was ridiculous, rah, rah, rah. Well, tonight, let me give you another prediction. A common property in Australia is going to $4 million. Excuse me? Oh, you heard me. Now, there is a chance that between now and then, a new currency will be introduced, a digital currency will be introduced. And what they do normally is they chop a couple of zeros at the end. So if something's worth 100,000, they say it's 10,000 or 1,000, right? You just look at economics around the world. This may happen here or not happen here. But nonetheless, if we're to keep it going, I want to say to you that by 2050, right? A property in Australia, 3-bedroom, double a cup garage will be $3 million. A 4-bedroom house will be $4 million. Okay? Wages will be much higher, etc., etc. Just look, I could buy a house in the 1970s for $17,000. And think about what the income was then. Think about what rents were then. So everything is a floating piece. But if you buy something tonight, it's a discount tomorrow, right? What do you mean, Julio? Well, I mean simply this. If I bought a house 10 years ago for $500,000, today is $1 million. If I buy it today for $1 million, in 10 years from now, 12 years from now, it will be $2 million. Simple. So if I don't buy it today, in 12 years, I'll pay $2 million for it. But if I buy it today, I paid $1 million for it, and in 12 years, it's worth $2 million. So it's a discount in time. Does it make sense? Vacancy rates are very important when you're talking about property investment because you have two partners. You have the tenant paying you rent and you have the ATO. Listen, when people say to you, oh, they're going to take away negative gearing. If every property investment in Australia was to lose their negative gearing, what do you think all the landlords would do? They will all together have to put the rents up, right? So what actually happens is already too tight. And if rents go up in such a significant way, the majority of people will never be able to save a deposit to buy a new house. Some are arguing that we're already there, and that's why the government's giving us new legislation saying if it's your first home, it's only a 5% deposit, because otherwise people will never be able to get into the market. And home ownership is so important. So what you will find me arguing for is that you should have a bunch of properties where other people are paying for it. Why? Because you can, right? With a strategy, That's where we're going. So that's what I call the missing link. You need the ability to integrate investing with debt reduction and tax planning. You need to put in place a systematic, simple, safe, easy to understand, and repeatable system to enable you to create a large asset base without the hard work. The big missing link is the ability to integrate investing with debt reduction and tax planning. And that's why we love JDL. Just do life. Do your life with a plan. This pie chart is an incredible piece of the jigsaw. Once you see it for what it is, like, look at it like never before. Once I saw it and I understood it, that's when I knew I was going to be wealthy. Check this out. Imagine that you're going to buy an asset and a tenant is going to pay for 50% of the bills. Yeah, all the bills. Then the government's going to come in and give you between 25, 35, 40%, right? And this pie chart, it's, custom made, and that's what the software will give you in a moment. You'll be able to design this for yourself. I'm going to give you a tool that never again you're not going to know. You will know your numbers forever. The point I want to make with this slide, though, is this. Let's just say your contribution is around 15%, okay? So you have two partners that pay 85% of the bills, and you get to own 100% of the assets. Let me show you something else. Which way do you think rent's going to go between now and the next 5 years? It's going to go up and up and up. So the more rent you pick up, so when you buy this property today, you're fixing the price. So you bought a property today for $750,000, $1 million today. Yeah? That's the price there. You do all the adjustments, you collect the rent. But that debt is the debt. That debt is the debt. As rent goes up, that means that this tenant who pays 50% will be paying 52%, 56%, 80%, all of it cash flow positive, right? That is what we call the chain reaction. Now, let me just give you a quick summary now of how this whole thing about the ATO, how it works. The ATO allows investors to claim two main types of depreciation. First, on the building structure itself, things like walls, roof, foundations, typically over 40 years. Second, on the fixtures and fittings, things inside the property that lose value faster, carpets, appliances, right? So those things can be depreciated within 5 to 10 years. So what actually happens is this: once you have a property investment, you get a quantity surveyor who will prepare a depreciation schedule. And that's how you get an incredible amount of tax deductions. Properties will give you insane tax deductions. And here comes the duality of this. Even though you're claiming the depreciation as if the property is losing value, it's actually gaining value. So there is a double whammy in there. Of course, you will have to replace the carpet eventually. Of course, you're going to have to maintain the house. But bottom line is, as the house goes up in value, and the rent goes up in value, you can borrow against this house itself, refit it, paint it, do whatever you need to do. It become a self-sustaining system, okay? And now I am going to show you how, if you, again, were to take a photo, a photo of one I'm about to show you now, a screen print of it, and look, I want you to pay attention to this. This is how you get extremely wealthy in Australia, okay? This is how you get extremely wealthy in Australia. If you already have your house, the golden circle means, cool? The golden circle means where your own home is protected. If you have debt in that house, we want to get rid of that debt ASAP. If you have debt on your own home, we're going to strategize this to create a debt reduction strategy for your own home. Now, you can pull equity out of your own home and buy the first property investment. And then you start then integrating the two. The moment you have more equity or more income, you borrow against the two houses and you buy the third one. Why? Because they're going to let you. Then you, as time goes by, what the software will do is map out your life. Imagine right now if I could give you a tool that you can sit with your accountant and have better conversations with your spouse, with your accountant, right? What if there was a machine able to have a look at all your numbers? I know people are really scared or excited about artificial intelligence. We have the most sophisticated software in the country, recognized so. So what happens now is houses that buy houses, then houses that buy everything else. When you see the arrows coming on the other end, is you bought your first property investment, big move. Oh, your first property is going to be the hardest. The second one, yeah, I got it. But the third one is houses buying houses. Once those properties go cash flow positive, so let's just say my house number one puts $100 in my pocket every week. Well, I could go out to dinner and use that $100, right? It ain't gonna be a big dinner or an expensive dinner, but my house is funding it. But what if I put that $100 a week into a managed fund, right? At the end of that year, get this, it's $5,000 worth of managed funds. Now, what if the house just keep putting money into that? Second house, start buying shares. Next house, start putting money into super, crypto, whatever. Houses that buy houses, houses that buy everything else. So what I want to do now is to say to you, all these concepts, debt reduction, tax minimization, the way the debt works, I hope this has been of great value. This is our legacy. This is the conversation that we have had with people for 30 years. What if right now I could deliver to you, I am not exaggerating or making, you'll see it, right? What if I could give you 10 hours worth of consulting in 6 minutes? Well, of course, 6 minutes is how long it will take the AI so that you will know everything you need to know towards your future. What I want to do right now is called a case study number one. I want you to imagine it would work for anyone, be you single, be it a couple, right? Imagine you could put your numbers and the software would just take you through all you need to know. Let me show it to you. So Joanna and Neil, okay? So basically, I'm not gonna go and bore you with too much of the detail, but just show you what the software actually does, okay? And I'm not selling the software. The software is just a tool to get people really present. What we actually do for a living is we build the processes for people to build, access those capitals, right? We are absolutely pro the picture I just showed you. Houses that buy houses, houses that buy everything else. But here is a tool that people get present. So check this out. So Joanna is in IT. She's on $140,000 a year. She's putting 2% of that money into super, okay? She's married to Neil. Neil is in dental. He's on $88,000. They're both Australian citizens. They have 2 kids, a 6-year-old and a 3-year-old. The software, the AI in the software is collecting the data. We already know that people start matching their income to their expenses. And the truth is, it started to make all sorts of algorithmic analysis on where they are at. So they have $140,000 in cash. See, when you see somebody with $140,000 in cash, often this cash may be sitting on a separate account, but sometimes it's sitting against their own debt on their home on an offset account. They have $256,000 in super. Yep. They got 160 grand in shares. So when you see somebody with 160 grand in shares and $140,000 in cash, you know that financially there is some awakening already taking place. Got it. Now, they're saying that they have credit card limits to $10,000. Yep. They can save $550 a week towards their future. They would like to retire in 20 years with the equivalent of 150 grand. Okay, right? Now check this out. They have a house worth 1.1 million and they are owing 245. As a matter of fact, they are actually owing more than that, but 140 grand in cash is sitting in their offset account. So they're paying interest on 245 at 6.5%. And that's it. Now watch this. I'm gonna press one button. The software now is going to zero in on who they have been. So imagine if the software could create for you 3 timelines. Stay as you are. Keep your belief system.
Everything that everybody's doing, keep doing that. Just keep being you. Got it. Then the software is going to create another version of you that says what's possible for you now. And then the software is actually going to lay out the houses by houses. Check this out now. This is this couple now, and the software is already telling them, if you were to stay as you are, by the time you retire, you're going to have $2.487 million outside of your home. And if what you told us is true, yep, you want to retire in 20 years with the equivalent of 150 grand, yep. In 20 years, you're going to need $328,000 to buy what 150 grand buys tonight. So the software is already taking care of inflation, and all the services and goods that tonight cost 150 will cost 328. So there is no guesswork anymore. And if you're to pull out of your 2.4 million, right, 328,000, you're going to run out of money in 7 years. That's you. Got it. Now, what the software does is saying, cool. Remember that little equation? Yeah. About the pie chart? Yep. Well, the software already knows that every week that goes by and you don't do anything, you are burning $3,900. You're throwing in the bin. Excuse me? Yeah. The software now compared a version of you that is as you are, and a version of you that could do something. Yep. And then ran that by 20 years, and it's telling you every time that you don't do anything, this is your opportunity cost. It's costing you $3,900. Okay. Now check this out here. These guys can buy one property investment. Now I'm going to go not too much, not too deep, but every one of you get access to the software tonight. All of you. As a matter of fact, you're going to love what's about to come now. So check this out. If these guys then were to go and buy a property, what if I was to say to you, I can press one quick button here and we'll give them their little pie chart. Done. Everything is done. All the calculations is done. All the conversations are done. So if this guy were to invest, the software already know they can do something. It already budgeted for cost, stamp duty, solicitor's fees, cancel rates, insurances. There is no numbers that it did not look at. How powerful is this? So now, if they were to move on something, they know that the tenant's going to pay for 52%. The taxman is going to give them 39%. They are going to have to pay 8.5%, $77. It's done. Hey, Julio, how did you get to that? Hey, can you tell me about the numbers? You press down here, the software has done all the tax tables, everything is done. It already calculates in 2025, if you were to assume that you're going to buy a property, everything is done. Here is her income, his income, plus the rental income, the deductions. It's telling them how much tax they're going to save in that year. So imagine right now that you meet a couple that can save a combined amount of $19,000 a year, right? That $19,000 that comes back to them, straight into their personal mortgage. What do you think is the impact on their debt reduction? Well, what if I say to you, it's all mapped out. That is. So basically, the software is already saying your personal debt will be paid off in 4 years. No. Yeah. So this software is designed to give power to people like never before. Now, I just want to go back here now and show you something really quick. What if I could press one button, and this software by nature is extremely conservative, and you have the control to say what you believe. There is no one here forcing, selling any numbers. You see how the equation on the software is this. Property in Australia, if you do any research tonight, people are going to tell you property in Australia is going to perform between 7.5 and 11.5, depending on where you're buying. Well, I told the software to imagine the property is going to perform at 6%. If you have money in the bank, 1%. All these numbers here are open. You can come in and change. But check this out. We already know that this couple can buy 4 property investments. Everything is already modulated. And if they were to follow our strategy, they would have $6.746 million at give or take $77 per week. And yet they said they could save in 750. These are the conversations, folks, that are not happening. So first and foremost, people have a gut feeling. I got to accumulate capital. Oh, I should buy a property investment. But how do I make a decision? Should I afford or not afford? The whole piece here, okay, in terms of this conversation, is the software will even give you a comparison. No, yeah, this is you if you just stay as you are, okay? Please notice no one is putting any property in front of you. No one is doing anything. Here we go. So it builds the graphs, compares them, but here is the potential for this couple. They may finish their lives with 2.4 million or 6.7 million. Now, which one do you choose to be? So the conversation for us as a business, first and foremost, is education. Then access to their numbers. It's designed that they can take control of the numbers and work, right? And work absolutely knowing where the numbers are at. Cool? So guys, we just finished case study number 1. Now we're going to go to the most important case study, yours. Tonight you go to bed knowing all your numbers. Your not knowing ends today. The beginning of your hypnosis being destroyed happens right here, right now. Right now, you're going to see a link coming through in the chat. My team is here with me, and you're going to find out what you can achieve for your future right now. We're about to give you hours of consulting in only a few moments. Now, please understand this. The software is designed for you to work with your accountant, is designed for you to work with your spouse, with your family. It's designed so you know all your efficiencies and inefficiencies. You just saw that in case study number 1. We're now bringing this now to you. Well, we're going to do it together. You're going to have the power of your numbers in your hands right now. So copy the link that's coming through in the chat right now, or just take your phone and go through the QR code and let's go in together, okay? So you're gonna see me now come in, and I just open up my browser now, and as you can see, I copied the link that you received in my browser, and we're open now. You can see it right here. Okay, so let's do it together, right? As you can see, it's easy to get in. This is going to create an account for you. Once your account is created, you're going to have at the tip of your hands the very best software available in Australia, right? Let's go. We're in. All right, now, how old are you? Okay, so basically just straight in, put in your age, all right? Now, what you're gonna do now is you put your income per annum. Now, if you're in a partnership and you're gonna do it together as a couple, then put the gross income of the family. So, it's 2 people. What is the combined income of the 2 people? No, you're single, just your income. So I'm just gonna throw some numbers here just to make it go, right? How much do you have saved right now? And again, if you have just cash, if you have money on your offset account, just put the money that you have in savings, be it in cash on an account or on your offset account. So I'm just gonna say now, for argument's sake, this number, superannuation, how much have you got in super? Well, guys, if you put in numbers that are too wrong or not right, okay, the results will be totally out. The more accurate you can be, the better. Now, I know that you're tonight and some of your numbers are like, I'm not sure. Just be as close as you can, all right?
and we will get a sense of what's possible. Now, check this out. Hey, Nathan, how many people in the software right now? Pedro, check out for me. Look, we talk about Pareto rule. There is an incredible number of people that haven't hopped on yet. Why? Because now you are facing the numbers. Your numbers have no feelings, you do. The numbers you have right now, thank you. There's more people coming through. Great. Guys, this conversation about the software is this. I don't want to have your data. You want to have your data. This software is designed. See this link here? It's going to send you an email. Share it with your accountant. You will know today. It's going to take out all your inefficiencies. So if you have a reality in which you want to create, more people coming through, this is great. If you have a reality in which you want to create wealth, this is the legacy called Just Do Life. So your personal debt, here the personal debt is if you have some debt against a car or something like that. Are you single? Are you married, right? So I'm going to go single here now. How much can you save per week? Cool. So the savings per week, this is the petrol for the engine. I want to say the more you can save per week, the more powerful the engine will build. But I want you to be as close to reality. How much can you put towards your future, right? Now, when we come here is how long would you like to retire on? And the piece is retirement now is a time in space where you stop working. Let me help you out with some conversations here right now. Of course, I have had people say, I want to retire in 5 years with $1 million a year. Okay, what have you got in play? So there is no point in being unrealistic. So for the sake of you having clear numbers, imagine you're gonna retire somewhere in your 60s. Maybe 60, maybe 62, 65, you know? So how many years you are off mid-60s, okay? That's a good guidance for you to work with. And when you say how much would you like to retire on, I want you to imagine your house is paid for, your kids are gone, like they no longer dependent on you. How much money would you need to live your life, right? Like, so your house is paid for, you're not paying for college tuition anymore or any expenses with other people. That's a good number to go here. So let's just say $150,000 per annum, $3,000 a week is what I'm going. $3,000 a week is a good budget. If I want to travel, I want to do this, no, some people may say $1,000 a week. Some people may say $5,000 a week. So per annum, how much money would you like to retire on? Now, check this out. I have here now a lot of people. Now you are individually, each one of you considering your future, the numbers. Your numbers have no feelings. How many more times can I say that? The truth is, this is an opportunity. What happens right now, like Nathan, how many people have we got? Pedro. Look, it is fascinating to me that we still have 40% of you looking at it, not yet in the software. Now, the moment in which you enter the software, the link is right now. Hey guys, can you just repost the link perhaps? Or the link's still there? Oh, good. Now, what I want you to have as interaction with yourself is this. For those of you that are not looking, you are not looking. And the results of not looking is the as is. Now, if you think of me as insisting and pushing, of course, I want people to be empowered, right? This is the end of not knowing. And by the way, how many? Right. So many people already triggering. Some people already ahead of me, already punching it in, and then it's coming true that so many people can already invest in properties. So I have one on the left, I have all these people that have not even come in, and the team is now celebrating all these people that we already know can build a chain reaction. Well, let me stop talking too much and keep going. So now, over here is what is the value of your own home. If you don't have a house yet and you're just renting, the number is 0, okay? But I'm just for argument's sake, I'm gonna put a value of a house here just to see what happens. I'm gonna put the debt against that property over here, all right? Now, if you already have property investments here, just for the sake of tonight, I want all the value of all your properties together, all right? So let's just say you have 3 properties, each of them worth 700, right? So you're gonna put 2.1 million there. And then what's the total debt against those properties? If you got nothing, it's 0 and 0 as well. So for argument's sake here right now, I'm gonna go, I don't have a property investment yet. You know what? Let me put in a property investment, why not? So let's just say you have a unit that you bought somewhere, it's worth 645,000 or a property, that doesn't matter. Let's just say 734,000 is the value of it tonight. You used to live in this house, it was your first house, and now it's your property investment. And let's just say that the debt against it is $300,000 as well. The moment I press this now, it is game on. Those 10 hours, what happens now is this. Inside of the AI, we have the equivalent of a halfway accountant, halfway broker. But look, I have to use the word halfway because the AI is so powerful. And I don't want to claim that the AI is an accountant or is a broker. But all the calculations about your numbers are done. Check out this couple. If they were to work for the next 18 years, this person I just created right now, they would have $3.5 million, right? Now, you see here how we said we want to retire on 150 grand, exactly like we did before. You know exactly how you're going to land. Check this out. Now, what is possible right now, right, is this. This buys one property investment right now, and then we can go into the details of the details. And this is where the conversation begins. There's nothing you're not going to know. You're going to know how much you to cover for that property, how much to carry it through time, before tax, after tax. Man, this is insane. And because you have now access to the software, you can come in and out of it. You can share the software with your accountant, with your spouse, a brother, sister. Bottom line is this: 10 hours worth of consulting in 6 minutes. And is absolutely designed so you get really clear. Look at these guys. What if I was to tell you right now that these guys can do 3 property investments, retire with almost $5 million, right? Outside their home. It is an incredible piece. I can just go here, do a quick analysis, and tell right now, check this out. It will cost them $3 a week to own this property. Look, if there is not something you have seen like this, like today is the day. What I want to say to you is welcome to JDL Strategies. We can do now possible future. We can do comparison. Watch or look at the comparison check. This is them if they do nothing, okay? And this is them if they actually do something. As I showed it to you before, bottom line is this: your numbers have no feelings. There is $1.4 million worth of difference for $3 a week. Let me say this again. Without a strategy, these guys will retire at 3.5 million, okay? If they were to do this, the property will cost them after tax $3 a week in this particular numbers year, and they will be better off $1.4 million. Welcome to JDL. So guys, for those of you that are coming into the software right now, it's simple as this. As you put in your numbers, okay? There's more people coming through? Yeah, great. And we can tell now how many people are triggering right now. We are going to create some serious multimillionaires out of tonight. You are in the best country in the world. This is exciting to me. You can notice that I've been doing this for 30 years, and look at my level of excitement. At the end of the night, that's because when people take responsibility and they do a reality check on their numbers, life starts to take shape. So guys, welcome to JDL. For those of you that are here on the software right now, the team is going to start making contact with you ASAP, and then we're going to take care of you taking care of business for your future, right? Now, what I'm going to do now is go back to the presentation. Let me just bring it up again. So here we go. Discover what you can achieve for your future now. If you, for any reason, if you have not yet gone into the software, take a photo of your screen right now, take a a print screen because you can always come in through this QR code, or copy the link on the chat that people send through to you, and we will have this available for you for the next few days, right? Share the financial wealth check results link with your account. It's easy when we talk about the past, right, or the potential future, but let me share with you real people that are our clients. This is real people. So Jonathan came in, bought a property with us in 2019. He bought this property for $549,000, okay? Now, when you have a look at this, it's now 6 years later, he has $231. So it's a 42% rise. It's the equivalent of $57,000 worth of income per annum. Now, the beautiful part about it, when you look at this from a point of view, is this. This property is gonna generate for him $21,000. Get this, $21,000 worth of tax deductions. That's the money coming back. That $21,000, we grab it, put it onto your offset account against your own home, right? If you don't have a home and you follow the investment path first, then we put that $21,000 against your property investment. If you understand what I'm saying, in the next 10 years, Jonathan will have $210,000 worth of debt reduction against his property by just being strategic. Let's have a look at the next client. If you look at Stephen, and he has 2 property investments, in 2021, bought one in Queensland, in 2022, bought one in Victoria. You now start to get what the business is about. It's about repeat business. For those of you that will become client of JDL right now, you will know we will help you to build the most significant property portfolio you can imagine. Check Stephen Go now. Look at this. So when you look at it, he bought the first property in 2021 for $880,000. The growth is $249,000, right? Then he bought another one in Victoria at 2022, right? Purchase price, right? $724, okay? This property in Victoria, we were strategic because what was happening is this. This is JDL is this level of tailor-made. Okay, it's important to talk about Stephen. What happened there was this. We knew his first property was growing, and we knew the second property was going to come. So what we did was we negotiated with the developer to know, hey, when is this new land going to be released in Victoria? And we put an expression of interest on it. The property settled a year later, right? After the strategy was done, a year later. So in other words, he missed nothing. By putting that expression of interest down, he secured the price 1 year before the land was available. Now the house is being built. Make no mistake, the moment that the second property comes in and we have a tenant in there, we're going to review it and we're going to go for number 3. You get that right. And this is possible because the software exists. We in touch with his accountant, finger in the pulse. What happens here right now is the reality that as this is happening, he also is picking up $21,000 from the first property. In a moment from now, he's going to double that. He will go all the way up to $36,000 back in tax. That's $360,000 over the next 10 years. And those properties are close to cash flow positive. Guys, this is the game. It doesn't matter how much I actually built this. You start to understand that JDL is a frame. What I showed you in houses that buy houses, that's the frame. And then houses that buy everything else, these are the people coming through right now. They are coming through. So this is Harry and Rachel, 2019, 2020, 2021. Here's the valuation of the properties. You already know the moment in which they have equity. Now, how will they know? What if also tell you that the software itself keeps the track of every property? It gives you a valuation on those properties daily. The moment in which they can go again, they will know. Now, we are in the game of creating the wealthier generation of tomorrow. Welcome, welcome, welcome. $32,000 worth of a tax minimization, okay? Now, these tax will vary how much money you get back to do with your income right now. So please understand, if you know people with great income, they have great income, you think they're rich? Not necessarily. Not necessarily. What happens is that income gives them great lifestyle. They look rich. But when you look at Harry and Rachel that don't have that amazing income as other people may imagine they do, but they have a strategy. See, every single property that they buy brings them income from that property. And then every time that they build that portfolio has nothing to do with the income they have from their jobs, right? So I want you to be very clear. We have clients that have huge income and they arrive and they have no strategy. And we run their as is. And even though they had great income at the end, there's not a lot to show. But when you come to clients like this that are already in a chain reaction, even though they don't have a great income, at the end of it all, they're going to have 4, 5 properties. They may sell 1 or 2, clear the debt, and they have 3 properties feeding them forever. And then their children have a platform to go from. So guys, here is the pillars of the business called JDL strategies, okay? As a matter of fact, I'm going from the right to the left, so you start to see how we actually operate. Number 1 is education. That's where you are right now. Did you get some value of being here with me tonight? I would love if you follow me on Instagram and if you would make some comments there if you got value out of this. If you do not get value out of this, I want to know as well. I want to know if I could add any more value to our conversation. So education is the basis. I also told you in our website, jdlstrategies.com.au, there's a couple of books, videos, it's all designed for you. Next stage is the software. The software operates like this. You're welcome to come and play. The moment you all come and play with it, I would love if you could share it with whoever helps you with your financial conversations, right? A broker, a financial planner, an accountant, somebody that knows more about money than you, and then you can actually have input with, right, people that you trust. Now, we have been doing this for 30 years and we become the trust conversation. And that's why this is our legacy. If you think that JDL strategies sell properties, just don't be our clients. We buy properties for our clients. We have been doing this for 30 years and we have bought billions of dollars in real estate. We know a thing or two. And if you get that, you get the business model. If I failed you at a house number 5, you're not coming back for house number 6. So we don't fail. We just don't buy crap properties. Crap properties is a technical term. We just don't do it. Cool? So what we do is we have a 44-point checklist. I'm going to talk a little bit about that. Okay? And even if we source a property for you and then the finance team kicks in, the truth is this. If the property does not value, we'll kill the deal and get you another one. Let me now show you
a tax bill over $100,000, and I was a big, hard-working doctor, and in my mind, all I had to do in my life was work harder to make more money. And despite medical school being a challenging process for me and thinking of myself as being quite smart, I didn't work smart. I used my knowledge to work harder. By working smarter, I could reduce that tax bill and I could accumulate assets and to really have reward for my profession. It enabled us to think a little bit more clearly and to really work as a team. I thought we, within the day, we felt that we actually were working as 2 individuals. This course made us think, no, we're a lot more stronger together. But not just we are more stronger together, it gave us the tools and at least a structure and a strategy on how to actually move forwards together as a team. And it really embedded itself. It took us nearly a week to digest after the course, just the pure strategies. And every time we looked at each other, we'd smile because we knew that something new was coming up in our lives. We really, really felt that.
I really enjoy it. I really enjoyed a very nice course. And actually, I was so naive in financial things. And the only thing we know is about how to go to the practice, how to work. We earn the money, nothing else. But now yeah, we have some ideas at least about how to go on, how to proceed. Actually, now I think I have a more clear idea about where I would be in 5 years, in 10 years, financially, and how I'm going to retire. So that's good. I have some plan. You know, when I want to go somewhere, if you don't have the address, my life, I think my financial life was like that. You don't know the address, you're just driving. But now I have the address of the place I want to go.
To know about tax planning, bit of a debt reduction, and know about the self-managed super funds and how I can utilize my savings and the super both to purchase a property or probably looking at the existing property portfolio and see how we can enhance or expand, or we can actually have a strategic planning as we go into the pretty much retirement phase. And I think there was a fantastic team of Julio and Dominic, and they were both really awesome speakers.
So what do you think? Now I want to talk to you a little bit about finance, right? We have access to over 90 banks across Australia. As a matter of fact, we have what's called a broker's portal. When you become a client here, what we do is we get all your data, but then we take your name out. And then when we take your name out and we go to all the banks, we say to the banks, hey, we have clients that look like this. So your file, right? Your financial file never gets touched. Your credit reference never gets touched. Basically, all the bank says, yes, we would take a client like that. And then my team will source for you what's the best bank for you. Now, many brokers can claim to do this, but I want to expose something to you right now. What actually happens to the typical broker is this. The difference between a good broker and an excellent broker, the difference. Everybody knows a good broker, okay? Now, the good broker is a person who can get you the money. Got it. Great broker. Got me the money. I needed the money. The excellent broker is the broker who will get you the money, but then design for you a debt reduction strategy. You want to be out of that debt. That's what we covered in the beginning. You want to be rid of that debt as fast as you can. And I promise you, this is what our team will do. Again, if you could take a screenshot of this or a photo of this, you see the slides here on the right. What happens here is this. Go to your broker and you say to your broker, I want this, right? Your broker should know what we're talking about. If you don't have an excellent broker, just come home. We will take care of you. We'll look after you. I want to add value to absolutely everybody. I want you to know that I have trained many people in finance as well. The name of the game is access to the money. The moment you get it, you got to get rid of the debt as fast as you can. So that's what this is designed. Houses that buy houses, houses that buy everything else, and then a debt reduction strategy that gets rid of the debt. So you end up at the end with the biggest amount of wealth possible. Remember when I said at the end of every year, right, or a particular date in every year, you look at it and you think, am I richer than last year? The reason why I said that before is because now that becomes possible. That now becomes possible for you, right? So what's happening here now is we are committed to debt reduction, right? So guys, I want you to know that our brokers are award winners. They are excellent people. And some of you, you may be in a position right now, you say, hey, can I please have just an insight into my finance? And if you want to refinance right now, if you understand that there are possibilities and so on, and all you want to do is do a finance piece, right? I want you to just take a photo of this QR code right now and say, I want it, right? And the team will look after you on that as well. If you and I were on a flight, you know when the captain says, cabin crew, prepare for landing, that's where we are right now, okay? I just want to show you how we actually select our properties. Every single property inside of our purchasing power has to pass a 44-point checklist, right? We gotta pick up out of that a 44-point checklist at least 36 points, minimum, right? Now, the closer you get, okay, the better the property is, so we don't miss it. It's all to do, look at the score on this one, 43 out of 44, all to do with infrastructure and the reason why that property grow in value. What we want to do is borrow against that property and go again. Now, what's going to happen here now is the team underneath Pedro, and if you are blessed, Pedro himself will call you, right? The team underneath Pedro will reach out, and he's not just a good-looking guy. He knows his stuff, right? Pedro is a delight. We have lots of good feedbacks on the guy. Pedro will reach out to you, and he will start then. For those of you that qualify, yeah, there's more people qualifying. It's great. There's more people qualifying now as we speak. So Pedro is going to be in touch with you, and he will then book an appointment for you to meet with one of our client managers to take you through your journey, right? Now, guys, I want to say this to you. There is no Julio. I rely on the hands of some amazing team. I have an amazing team. And I want to say to you, it comes here, the lights are here, Ozer is here, the team, some of the people already in the room making me come to you with such zest and energy. But I have to take this opportunity to thank this team that makes JDL Strategies shine. An amazing, amazing team. And we love you to be part of the family, right? The last thing now, just to say to you is, once again, I'd like to ask you to follow us. Would you be so kind to follow me personally, right? But to follow also JDL Strategies, right? And if you are a doctor, follow MediGrow. The point of this social media endeavor is just to deliver the latest news, what's possible, what's happening, right? And now, in order to finish the event or to go towards landing this, I'm going to go into questions. Now, throughout the night, a few questions already came through. The team is already telling me they have a few questions already coming through. But now, if you have any questions for me, the team will collect it. Gives me a chance just to drink a little bit of water now, and we're going to go straight into answering questions. All right, guys, let's do this. All right. So I do have a couple of questions here right now. It says, the number one says, if I put money into my loan, does it reduce the interest or the principal? Guys, this is where strategy is everything. Okay, there's two ways you can put money into your loan. Number one is if you have an offset account. If you have an offset account, what will happen is, so you have your mortgage, let's just say $200,000, and you put $50,000 in your offset account. No, you have not reduced your principal. You have interest. You have reduced the interest you have to pay. But sometimes, if you put the money straight into the mortgage account, then yes, you reduced the principal and also the interest. Make sense? So this is the beauty of offset accounts. Offset accounts reduce your interest, but not the principal. But the impact of a strategic conversation, it's there. So if you wanted to move again, if you wanted to buy another property, you can just quickly take out that money that sits inside of a interest-only account, an offset account, and move it out. Okay. The other conversation about interest-only or not. Hey guys, the thing that I have observed over the years is if you can pick the market and decide if to go interest only or not, I have noticed that if you let your interest go up and down with the waves, and then you take a 10 years or 15 years approach, it's kind of hard to pick when to fix, right? Especially right now. For example, we're all expecting 2 months ago or 3 months ago, the interest rates to go really low, but it isn't. It is actually gonna go stable, which it's a good lead way now for my next question, which is do you, I know another one's coming, do you recommend buying a house before Christmas, right? Does it make any difference? Guys, I want you to know this, and this is a conversation we're having with many clients. And some of you are clients of JDL already. You are here, you're doing a review. So I want you to explain a concept we call the best Christmas ever. We run it every year, right? The idea is this, okay? When the end of the year approach, just think it with me for a second. Comes the 10th of December or the 13th of December, 15th, everybody's thinking next year, next year. But next year doesn't start in January, does it? It starts in way later than that. It starts in February. So for a month and a half, a little more than that, the builders, developers, they all still have to pay the receptionist, the foreman, the crew, they have to pay everybody. And that is why, right? You will notice Australia-wide, doesn't matter which state you are, it doesn't matter what development you are, you see it's very, very common for prices to go up. Not only there's a lot of people on holidays, it's the end of the year, people make life-changing decisions, they may change towns, do things, and that's why you see that when you come back at the late January, early February, prices always go up $10,000 to $20,000 to $30,000. We have seen up $50,000. Now, if you were us and part of the family, what do you think we would do? We would leverage the last 20 years and the fact that this year alone, we are buying over 200,000 properties, right? So what is actually happening inside, we're buying 200 properties. So what is actually happening inside of this moment is this. I can go to the builders and developers and say, if I put an expression of interest in this property before Christmas, and I was to settle it in January, February, can we keep the price? Will you hold the price for the JDL clients? And the answer is yes. So what we were talking about today is this. This is our last digital event in the open. Some of you are accountants in the call right now, and we are going to do events for your accounting clients. And by the way, thank you for coming. Okay? Now, be present. We do not sell houses, we only buy them. So if you are keen to do something, put onto the chat right now, Pedro, call me, right? Alana, call me, because what will happen, right? What will happen is these people can check with you if you're good to go. And if you are, you come online with us, right? So, by the way, Masters, thank you for asking this question because it's extremely, extremely relevant. I have another question now coming through, and the relationship between family members. Yes, you can equally buy properties with your spouse. There's another question coming through now. You can buy properties with your spouse, which is normal, your partner, and so on. But we are doing plenty of strategies across generations. We've done a strategy this week, right? Early on Monday, we had a father and son that came in. First meeting, second meeting on Monday. Now, check this out. The son has great income, better income than the father because of his IT skills. But the father has equity. So between the two of them, the idea is for the father to set up a strategy in order to look after his retirement. Is only 13 years away. So they're going to go in together. The father's going to put in the equity and the son's going to put in the cash flow. And then in the strategic positioning, we decide then who owns what. Reality for these two is this. Once the parent goes into the next level, the next game, in other words, he retires and then he passes away in 20, 30, 40 years from now, that house goes to the son anyway. So we do plenty of cross-generational strategies. Just have a look now. What's the next question? Yeah, I love this question. Does this work if we are earning only 73,000. This is what I was saying early in the presentation. It is not about the income, it's about the strategy. Now, we had two flight attendants that came. Neither of them qualified for buying a property investment, but together as friends, we put it together. There is nothing we haven't seen. There's plenty of strategies to taking place. Now, if you are on $73,000 a year, please go into the software. So at least we know, right, that you are here. You can put also on the chat, Alana, call me, Pedro, call me, get me on the phone, because then we can actually help you to do this. Okay, hold on a second. I'm getting questions, and my team is bossing me around while I'm still in camera. They're telling me to do a few things. Hold on a second. Would I recommend paying interest only or your investment house? What I would say to you is this. Depends on your strategy. And by just a question on an open video like this, it's kind of tough to answer. Now, I would be pedantic about paying the bank as early as possible, as fast as I can. If you have no plan to make any extra moves, right, you could pay straight to the mortgage. But if you are thinking about making extra moves, it could be moves of lifestyle even, right? Offset account could be the best conversation. That's why if you talk to Michael, if you talk to Scott, I'll tell you what, we will make a tailor-made strategy for you. Okay, my team is just saying here, well, send an SMS right now. Reply yes if you want our team to call you tomorrow. Okay. So if right now you know you want to talk to somebody on the team tomorrow, just say, yes, I feel very sexy, or something like that. No, just say yes. All right, just say yes, contact us. Now, there was a voice coming through here too, Jose. I could hear somebody saying something. Pedro, is there somebody coming through wanting to talk to me? Hey guys, if you want to talk to me, come through right now. We'll take one call, two calls, right? Can we do that? Is that a voice was coming through? Yeah, is there anyone that wants to ask something? No one's coming through? Oh, good. Guys, look, it's 8 o'clock. You have been wonderful. You guys have been a great crowd. Look, I did not have all the cameras on. If you're still here with me, would you just turn on your camera just for a moment? It makes a great shot for us. Just turn on your camera just a moment. Give us a hoy, right? So everybody can see you. Thank you. Thank you for coming. Thank you for it's so good. If you enjoyed this, can you give me a thumbs up? Was it a good evening? Did you guys enjoy that? Guys, this is my pleasure. It is my life's legacy. We believe that a wealthy nation needs wealthy individuals. And I'll tell you what, that we have seen everything. We have seen people just starting, people about to retire. There's nothing we haven't seen. And honest, we wanna be of help. So let me just give you a couple of more pointers before I go. JDL stands for Just Do Life. JDL strategies is strategies for you just do your life. Best strategies ever. The software is a result of 30 years. It's our legacy, right? We will give it to you as a gift. Never again, you will not know your numbers. If during this presentation, you thought, my brother, my sister, my best friend, my uncle should know about this, feel free to share the link, okay? What will happen here is this. Often this is the pathway in which we find. People get the link, they play with the software, they may find us online, and if you go to jdl.com, jdlstrategies.com.au, you will find books, videos, me training accountants, right? So the normal path that those links take place is people take it, they play with it, They have a conversation with their accountant. Next thing, we're hearing from the accountant. So if your accountant needs training, if your accountant wants to be able to empower their clientele on how to create wealth, we have specific training for accountants in Australia, okay? So guys, it's with great love. I'm gonna say goodbye. I don't think there's any other questions coming through. There's a guy here that really looks like me. It's freaking me out. I think his name is James, right? I can see another photo there. It is just like, I'm like, hello, brother. How you doing, right? Guys, you have an incredible night. It's been such a pleasure to be here with you tonight, and I will see you next time. God bless. We'll talk soon.